Joining us now in a first on CNBC interview for more is AMC CEO Aron. Adam, great to see you. Thanks for joining us.
My pleasure. Wilf, Courtney, nice to be with you both.
So talk us through why you feel the market is trading your stock down despite some record ticket sales numbers and decent earnings.
Yeah, actually, this was a great earnings report for AMC that we issued this morning before the market opened. We did report an all-time third quarter high for ticket sales and ticket admissions to our theaters, a strong improvement to our business, especially in Europe. Our food and beverage sales at an all-time record. Our EBITDA, which is really the basic unit of measurement for our company, was up 33% year over year when you adjust out a non-cash accounting change, something called ASC 842. So we really had great results. And the stock actually went right up after we announced. We've been the victim of some short selling during the year. There might have been some game playing with our stock today. But as I said, most people who follow the company closely thought this was a very strong record-setting quarter for AMC.
Well, either way, some of those milestones that you mentioned, clearly, you still have an EPS loss. And is that a sort of highlight, despite the fact that you have been outpacing some of your rivals, that your broader industry is under serious threat, that you're having record ticket sales, you're doing better than some of your rivals, but you're still reporting an EPS loss and your stock price is still falling quite sharply?
Well, we're not actually measured on EPS. We're measured on EBITDA. So it's not the most relevant statistic for AMC. Yes, there's a loss, but that has a lot to do with our particular circumstance. We've got a very complicated derivative security in place that gets marked to market every quarter. We also bought 3/4 of our circuit in the last 36 months. So whereas most companies report depreciation based on the cost basis of their assets, we use purchase accounting. So we marked all our assets, or not all, but 3/4 of our assets up to market levels in the last 3 years. So our depreciation expense is large. As I said, net loss, net income, EPS is not the basis of how we're measured. EBITDA is, and on that measure, we had a record 18. Second quarter of 19 was strong. Today we're up 33% year over year. These are good numbers. Your other, embedded in your question though, is the notion that somehow we're under siege. That's really a press fiction that comes out of people realizing that streaming is another way to watch movies, in addition to what might be called the old-fashioned way, where you go to a theater, except there's one thing. People love going to movie theaters. They do it over 1 billion times a year in the United States. And as I said, in the quarter that we reported today, we hit an all-time record high for admissions at our theaters. So as opposed to our business being under siege, we're actually booming.